everyone, Mark Pruitt here with our June Market Update 2023. Well, summer is here. We already have heat indexes between 110 and 120 here in Texas, and it's only June. My best advice is to find a shade tree and stay under it. Maybe get you a peach shake from Chick-fil-A as well. Those tend to make me feel a whole lot better. I also want to make you aware first of our new mascot. She has joined the team at Strategic to bring goodwill to all that enter. Her name is Indy. She is a hyperallergenic Bernedoodle, which is a Bernese Mountain Dog and a Poodle mix. She's less than 4 months old and already over 20 pounds and growing into that nose and those paws. She's all puppy and she's in training. Good-natured, smart as a whip dog, but I can't wait for those baby teeth to fall out. Honestly, they hurt. So if you hear a squeaky toy around the office, that's not Stephen, that's Indy teething. Now, regarding the markets, the Consumer Price Index, the CPI, which measured inflation, came down to 4% in May, compared to 4.9% in April, the lowest yearly inflation rate since March of 21. Falling energy prices were the key factor in May's slower inflation relative to April, as gasoline prices fell 5.6% in May. Overall inflation has been falling for a number of months on a yearly basis. It is down 11 months in a row and down by 5.1% points from its peak last year of 9.1%. So it's getting better, but 4% is still an elevated inflation rate. The Federal Reserve has stated it may still raise rates a couple of times in the last half of this year. It's yet to be seen, but if they do, they have stated they expect potentially 2 more rate hikes at 1/4 point. Bottom line, we'll all wait and see. A key point that I look at is also the unemployment claims. If you look at the following chart, it shows a steady rise in the seasonally adjusted insured claims has risen weekly since October of last year, but has leveled off the last part of April, all of May, and into June of this year, and that's a good sign in my opinion. With that said, we have done what we've stated that we would do, and that is to be back in the market in June this month. We've layered in slowly throughout this year. In our opinion, the market has not been driven by a broad recovery. For example, the following top 5 companies that are responsible for the vast majority of the stock market's 2023 gains as of June 1st are Apple, up 36% this year, Microsoft, up 37%, Alphabet, which is Google, is up 39%. Amazon is up 44%, and the current stock market darling of the year is Nvidia, which has surged 159% on AI-related excitement. Without them, the overall market, including dividend payments, would be up just 1.5% this year, according to the data by Howard Silverblatt, Senior Index Analyst at the S&P Dow Jones Indices. If you also remove the contributions from the 2 other largest tech companies, Meta, formerly known as Facebook, is up 120% in 2023, and Tesla is up 66%. The S&P would be slightly underwater for the year. Now, we do feel the 3rd quarter of this year will be moving in the right direction, and we want to be in the market to hopefully capture those potential gains. One of the things we have done is to have key core positions that we will stay in going forward, like the S&P 500, the Dow, the NASDAQ, and the Russell 2000, for example. Think of it as the core players of a sports team, and then we will have options to choose from off the bench like gold and energy, utilities, healthcare, and consumer staples, for example. We will also use some total bond funds as well, and that's based on the volatility index trend. We will have higher or lower percentages of all those positions. We can layer in a higher percentage in those positions, or we can de-risk those percentages when needed based on the VIX, which is the volatility index. If you have any questions, please don't hesitate to give us a call. We will be glad to have a conversation with you about more of that detail. You can call us at 1-800-381-8870 to schedule a time to visit. Thank you for listening, and God bless you and your entire family.